You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time for TWIFO. This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. You never know what's going to come across our radar every week. Maybe it's going to be gold, maybe it'll be crude, maybe it'll be ags, maybe it'll be indices, maybe crypto, all of the above. Swirl it in, maybe some weird stuff, livestock, dairy. You never know. You never know what's going to be on our radar. That's why you got to tune in TWIFO every week just to see for yourself. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network. We like it. We think you guys like it too. You guys know how to get it by now. You can always go to the website, to theoptionsinsider.com, and download or stream whatever the heck your heart desires. Going back for quite a while, you can always do the full archives via the app as well. If you want to just subscribe, set it and forget it, you can subscribe to TWIFO directly or to the whole network over there on your iTunes, your TuneIns, your Stitchers, your so forths, whatever you like. Pocket Cast is my go-to, but whatever floats your boat, we won't hold it against you. As long as you're listening, we don't care how you get it. And, of course, you can always get it live if you are so inclined every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, hot off the heels of Vol Views, right on into TWIFO. Usually, if you're listening live, you get a little little fun intermediary there as well to enjoy. So all sorts of fun stuff to join us live every Friday. See how the sausage is made, ask questions, all sorts of good stuff. And again, speaking of asking questions, make sure you hit us up. You know how to do so, not just in the live chat, but if you listen to the podcast, you hit us up on the site, on Twitter, on social media, email, all that good stuff. We do like to hear from you guys. Speaking of hearing from people, let's see who we're going to hear from today. Let's spin the old TWIFO wheel, and we are joined by my cohort, my partner in crime. He is not abroad today or from an undisclosed location. He is coming from the Bantix HQ, Mr. Nick Howard, the creator of a little program we like to use around here called Quick Strike. Mr. Nick, welcome back to the show, sir.
Hey, good to be back. I'd rather be sitting outside in the sun than doing the show, though, but my screens won't let me do that. So here I am in the dark.
It's kind of hard. You know, the nature of broadcast, it doesn't really work well with beautiful surroundings. You know, you got to be deep in the bowels somewhere to really make it work and make it quiet. I've made my peace with it, sir. Someday you will as well. How many places have I gone to where I want to do a show and they give me this great, beautiful venue overlooking something with great views, and I say, no. Bring me to the bowels of your basement because that's where stuff sounds and works the best. So, yeah, it's kind of the nature of the beast, sir. Unfortunately, our buddy Sean from Footsie Russell, Sean Smith, won't be joining us again this week. A little still under the weather, I think, but hope he should be joining us back again next week. We'll get him back on to talk all things Russell over there in a little bit. We'll get to that a little bit as well. But still, let's get on, Mick, everyone and their mother. It's got a lot of products lighting it up this week, so we can kind of just throw a dart and hit them. But I think a lot of people are interested in what's been going on out there in crude land. So we'll start there. Been an interesting week for WTI. Again, listeners, you guys can play along. As always, cmegroup.com/TWIFO, TWIFO. That's where you find the reports that Nick and I are looking at right now. You can do that all week long. Of course, you can always head on over to bantix.com to get the full deal as well. And if you do that, you'll see that it's been an interesting week for WTI. Couldn't really maintain those levels. People were hoping maybe it would go rally-ho again back north of 70. Didn't work out that way. Ended up the week down right around 66, down about a handle and a half or so out there. Handle and a half to two handles out there, right around almost 3% for the week. So pretty disappointing week for the WTI bulls out there. I know there are many of you up there. Of course, this little bit of a sell-off means we get a little bit of a pop in vol. Not a ton, but a decent move out here on the vol. You know, crude vol has kind of been anemic for a while anyway, so any little upside move, or in this case, maybe maintaining the upside rather than having it come off. Usually you see the vol pipe pop or spike, and then it comes right back down. This week we saw it maintained and actually increase a little bit. So I guess that's a good sign for all you premium buyers and vol lovers out there in WTI land as well. In terms of where the action was, number one with a bullet out here this week, listeners, come in July. In particular, it was the July 65 puts lighting it up. Again, not surprising, pretty much near at the money put, doing almost 30,000 contracts this week. The lion's share, 18,000, come in on Tuesday. The rest kind of scattered throughout the week. Of all that back and forth, only about 1,200 openings. So a lot of back and forth on this strike throughout the week, kind of where a lot of the action was here. Number two, we fall off a little bit to the 70 calls, also out there in July, doing about 13, almost 14,000. Actually, no, skip that. We're going out to the 66 puts first, the actual at the money puts, doing a hair more, doing 14,000 and change for the number two there, doing 6,000 and change on Tuesday. The rest scattered throughout the week. Again, only slightly biased towards opening, a couple of hundred contracts. So a lot of back and forth on the 65 puts and the 66 puts. Easy for me to say. Not surprising there, given that is kind of where we settled out for the week. Number three, hot on the heels there as well. Puts just a little bit coming in, just a couple hundred contracts ahead of those 70 calls, squeezing in a lot of put action here, where the 60 puts doing about 14,000 and change as well. Again, about 7,000, about half of that coming on Tuesday, about 1,200 opening net on those. Number four, finally we get to the calls, the 70 calls, 13,871. So just a couple of hundred contracts behind the puts there, with the lion's share, the activity coming on Tuesday as well. Monday, of course, we were closed here in the States, listeners, so no action there. And the rest kind of scattered throughout the week. Of net opening, only about 700 contracts. So, again, a lot of back and forth on all these kind of right around the at-the-money strike. 60 puts, 65 puts, 70 calls. just a lot of back and forth. Front month did about almost half of the volume this week, about 46.5%, which is kind of consistent with what we see out here in WTI on a regular basis. Rounding out the top 5, we've got the 68 puts. So it's all front month all the time this week, listeners, doing about 13,600, again, 10,000. So almost all of it coming on Tuesday. The rest kind of trickling in throughout the week. About net closing on 2,500 of that. So some closing paper on the 68 puts here to round out the week here on WTI options. Mr. Nick, also, by the way, open interest up about 4.5% this week. So a decent OI week here for all things WTI over there at CME. Mr. Nick, sir, what was catching your eye out here from a crude vol and skew perspective this week?
Well, I think we started to get that little bit of a break on Friday, right? So we come off from above 70 to, in the 67, 68 range. So we're a little softer at the end of the week. And the chart's actually a little bit deceiving if you look at it and just sort of look at the movement, depending on what your scale is. But there were some pretty decent moves after Friday as well. So as far as, noticeable things, yeah, the vol's up, but I think what that is, there might be a little bit of a net increase in volatility, but I believe that's more of the same of moving around that local volatility of the vol curve. So we're just sort of moving a little bit into the puts that are a little bit firmer on the vol curve from a volatility standpoint, a little bit of a parallel shift in the curve, but not much change in the shape of the curve. So we'll call that increase in the at-the-money volatility, but not that big of an increase from an overall net change in the volatility. If we're looking at the, we see the change in the at-the-money volatility because we moved down, but the change in the shift of the curve is not as significant as it's stated here in the numbers of approximately 1.4 vol and 1.6 vols for the August, and then a vol point for the September. So that's sort of the first observation, and then. And the skew sort of followed that same pattern. We've got the puts being a little bit more rich, calls being a little bit, calls being a little less cheap. So again, it's more of a movement around that local volatility on the vol curve than it is any big change and shift. So, but we talked about it last week, right? We were kind of, we didn't get through some of the higher resistance points in the underlying, and then we kind of softened up, and then it was going to be another sort of range bound trade. So I would think that again, depending on if we continue to go lower, we're going to see sort of the same thing. We might see a little bit more bid in the puts outside of just following the vol curve around. But I would think based on what the action looked like and kind of how it was setting up the end of last week, that again, we probably in our little bit of a rangy trade here, and there have been talk in the news about increased output and stuff like that, and so it sort of tamped down some of the expectation on the price. But that's really the biggest thing is a little bit of an increase, but not a tremendous increase, more of a movement along the vol curve. And then as far as just looking at the change in open interest this week, kind of on the low side from what we've seen, like just a little over 4%. So, typically on weeks where we're seeing some action like this, we're seeing a little bit more change in the OI. But again, like you mentioned, there was a majority of Monday was closed. There was some evening trading on Sunday, and then started the open again for the Tuesday. But little bit less than what you would expect on a typical week, but then again, we're on a 4-day week. So that's about all I'm thinking there. You mentioned put call ratios in the front contracts. Those are tilted towards the puts, especially in the July, and overall on the trade, it's puts were more active. And then I looked at the weeklies too, and there wasn't much action in the weeklies. So there was a little bit kind of a doubling in OI of the week 2 contract, but not a great deal of volume across the board.
Where there was some action, though, Mr. Nick, was out there in the spread, the WTI Brent spread. We talked about it before here on the show. Of course, it breaks down that relationship between the WTI, which is primarily the domestic contract, and Brent, which is, of course, primarily the international contract. There's been a lot of talk about that of late with this Iran deal and what's going on with some of the shale stuff and domestic production here. A lot of people thought, in fact, the kind of prevailing wisdom. In fact, I think Blue mentioned it in his report he put out a couple of weeks ago. A lot of people thought, he mentioned in his report as well, thought that that deal would kind of, or the break in that deal would kind of put a bit of what he termed, I think, a soft cap of around $6, maybe on the outside, 8 to that WTI Brent spread. And what we've seen, a lot of people were betting that way, and a lot of people saw that it actually has gone exactly the opposite. It's exploded. It actually hit $11 this week for the first time since 2015. So a lot of people were betting against that and got it handed to them this week. A lot of that coming with OPEC. A lot of push and pull. OPEC talking about that people were expecting them to lead supplies or increase supplies, given all this talk of Iranian sanctions, but it didn't really have the desired effect on the markets and what everyone was looking for. So interesting stuff. Of course, you mentioned some of the issues going on with production and shipping of the WTI and the shale as well. So it kind of all combines for a lot of interesting moving whipsaw, a lot of people out there in that spread. In fact, Nick, I'm going to cheat. I'm going to jump ahead to a listener question. Comes from Nicholas. He says, can you please do a breakdown of the WTI Brent spread options, please? Thank you. So he's very polite. 2 pleases and a thank you. So I think we can accommodate such a polite fellow. And as it happens, listeners, you can do this yourself. CMEgroup.com/TWIFO. You click on energy where you normally do for the and usually you would choose WTI. If you look at WTI, instead choose a WTI Brent CSO. That's the crude oil spread, and you'll see the options up there as well. This has kind of been a crazy one. We haven't really talked about this one on the show, Nick. Is this one you've looked at a lot in the past, or maybe recently?
I think I think we've discussed this early on after the presidential election, where there started to be some talk of taxes coming in. The tariff talk initially, and tax on the oil between U.S. and Mexico, and I think that was back in when we started to see that spread trade zero quite a bit. So just in our time of broadcasting, we've talked about that where there were thousands and thousands trading at the zero spread, and that was probably back in or around. Let me click on this chart here. Yeah, it was right in November of 2016, right after the election. It kind of pushed up, and it was prior to that. It hadn't seen much else. It had been around the 2s, maybe between 2 and 4 for a pretty good period of time, and then, like you mentioned, back in 2015, it really spiked down to 1282. There had to be some event there that I don't recall, Mark. I don't think we were talking on the show back then, but that in and of itself is, and that thing just moved directly back up and actually went positive in the early part of 2016. So yeah, these are all coverable. The volume is it's not huge, but it is there, and I think that if you pay attention and watch how this spread is moving, I mean, a lot of this movement down is over the last month, right? Like you mentioned, Blue said something, and we're talking about probably the middle of April. It was trading around -6, and now, like you said, it hit -11. But every time it hit that bottom, or at least the last time it hit that bottom, it just kind of shot straight back up. So it'll be interesting to watch the spread and see how, we've seen a lot of stuff overreact in the market. Like people we'll get somebody in Washington say something, the market will overreact, and then the next thing we're moving right back where we came from. So keep an eye on this, and my expectation would be that it moves, it goes less negative just based on historical reaction in the market.
Yeah, the quoting of this is a little interesting. Is this I'm looking here? What do we got? The DEES. All the action was in DEES this week. About half of the volume going up in the spread options. Again, you can find this on the /TWIFO link, listeners. Looks like, what's that? The DEES, is that short 6, that's down DEES. 6?
Yeah, DEES. That thing is
6 under call. Is that what I'm looking at there?
Yeah, the 6 under call, right? But that spread is minus 10.5, right?
Yeah, exactly.
Minus 10.5. So the 6 under call, when did that trade? That traded
Tuesday and Wednesday,
right? So, and then what's our what's our stuff look like from there? Tuesday and Wednesday still was, let's see, 1 week. Yeah, I mean, it looks like somebody sort of bet that we were overdone at that point on Tuesday and Wednesday, and boy, oh boy. Or, yeah, that's interesting.
Yeah.
Or maybe they just thought we were gonna keep going, or we're gonna go the other way. So,
I'm guessing they were betting the other way because that seemed like where the prevailing wisdom was going. Looks like we maybe had some ratio or just a bit of a spread going up on Tuesday as well. We got 1,000 of the six unders, I should say, and 9.5 unders doing 1,500 on Wednesday, and then 1,000 of the 5 unders on Thursday, Nick. So the prevailing sentiment was all across the board here on these. But I know people have asked about this before. This is kind of an interesting one. Again, it hasn't usually done a ton of paper, so we don't really bring it up here on the show. But this week in particular, it seems certainly an interesting one to watch and keep an eye on. Looking at for some weird outliers here. Dees is where all the action is, Nick. Dees 2018 and Dees 2019, where we got the 9.5 under calls also trading about 1,500 times this week. So maybe that's a function of the product. A lot of people just like Dees. Maybe it's easier to wrap your head around the spread in calendar year increments like that. I mean, there was some trading in some of the other months too, but the lion's share of the action coming up in Dees. Any other thoughts on the spread, sir, before we move on to the shiny stuff?
I think this spread is similar to how we see the deferred contract option contract trade in the underlyings as well. So if you go out to Dees 2019, there was about 1,500 negative 9.5 calls that traded, and there was a fair amount of volume, probably 4,500. What's missing was like 4,500 volume out in that Dees 2019. So yeah. Nothing other than, again, we always watch maybe a little too late, but it'll always do us some good to watch how this thing reacts after the big move in one direction or another. So we'll have to pay a little bit more attention.
Speaking of paying attention, let's turn our attention to the shiny stuff, sir, to gold. An interesting week out here. The gold bug's not quite as happy. Gold settling off about 10 handles, right around that 1,300 level again. And, we said how cheap gold has been in terms of vol, and that continues to be the case, Mr. Nick. So why don't you, we'll start a little differently. Why don't we start it over? You can break it down for us, what you're seeing from a gold vol and options perspective, and anything else catching your eye in the shiny stuff, sir.
Yeah, so I wanted to revisit a little bit about what we talked about last week. First, I put out some put trades that I thought were good based on where the vol was, and those levels, those prices probably haven't changed that much. Probably a little bit of a loss on the hedge. You can see the vol hasn't come in too much from what we talked about in the July and the August contract. So in particular for the July, we moved forward. We didn't see too much of a change in the volatility. So those are probably better premium trades this week. Now I still like them from just the range, and you probably can do them better than we talked about them in the charts last week. So wanted to make sure we pointed that out and mentioned it as well. Vol is still really low. Those puts are still, those 25 and 20 delta puts are still the lower volatilities on those vol curves. So I would take a look and pay attention to those and see what you think. In fact, when you look at the quick skew numbers here, we're seeing that 25 deltas got a little bit cheaper this week. The calls kind of stayed where they were for the most part across the board, at least in this calendar year. But the puts got a little bit cheaper without too much movement down. So, yeah, that's about right, without too much movement down. So I like those covered put trades or the hedge put trades, especially where we are in the range. We've sort of had a little bit of a test to the downside after the unemployment number, and I believe maybe some of that move down was with the unemployment numbers that Washington leaked, or if you want to say leaked or released a little prematurely, that the president mentioned in some sort of form of media, where the market got something like 69 minutes earlier than the release time. So, but that kind of bounced back a little bit, still down on the week, but I think that 1295, 1300, that's probably where again we're going to be bounded by those big handled numbers, 1,300, 1,400, whatever the case may be. So we're range trading, but I think those trades kind of work for us. As far as what's going on out there, the leader in the July contract, we saw a big change in open interest in the 1,260 puts, the 1,260 puts. So those traded about 70, almost 7,500 this week, and 5,000 of those changed. Were an increase in open interest. So there was some bears trading out there with the 1,260 puts, or maybe some people who think that we're overdone and there was a bid in those. But my guess would be those are somebody getting long those, thinking that we're not going to do too much from an upside standpoint. And then as we go out, not a great deal. 153,000 contracts this week, roughly. Probably going to be more than that by the time we're done with the show. Pretty decent change in open interest, 5%, 54,000 across the board. But not any real big numbers. 1,300 puts traded about 1,800 times in the August contract. 1,400 calls traded in the SEP contract, 1,400 in the OC, and then probably maybe the most surprising number here is in the November contract, the 1,050 puts. 3,000 of those traded, and let's take a look and see how much when that happened and how much. So 3,000 traded yesterday. 3,000 of the 1050, 1150. Now I believe, from what I saw, that was a put spread. So let's just call that a newly initiated put spread, because I think I saw somebody talking about it on Twitter and saying what it traded. It traded for 9 ticks, and I think it was theoed out at 7 in quick strike at the time. Now that I'm seeing those strikes and remembering, so we had 1050 and 1150 trade in the. Actually, I'm sorry, that's the 1050 and 1150 in the November. That was a put spread, but we also see some 1150s trading in the December contract as well. So we had somebody put on a very bearish put spread out here in November, and then we had some downside puts here in December. So those are really low strikes. When it comes to the environment that we've been trading, and I would think that if we got down to the 1,000 level in gold again, holy cow, I can't even imagine what would be going on at that time, and that would certainly seem like the time and the place to get long. I don't know what volatility would be doing down there unless it got completely depressed, but at least get long the physical. I don't think there was be much bad that could happen at that level. But anyway, that's what I'm seeing so far, Mark. And what else you got?
I'm looking here, it's looking at some of the equities as well. It's kind of funny. We were talking on some of our other shows this week, and we mentioned on the show a week or two ago here, I believe last time Sean was on, just kind of that insulated nature of the Russell 2000 versus the large cap stuff to a lot of these macro shocks we're seeing in the space right now. And that's kind of been the case we're seeing throughout the week here with a lot of the large indices, taking it on the chin and then rallying and taking it on the chin. We've kind of seen a nice, actually, Russell 2000 kind of bucking that trend this week, which, and a lot of people will write to us and they'll say, I'm done with all this, these who did what, who said what to who's buying what things. I want to focus on, things like earnings and valuations and things that are, much more straightforward, much more micro intensive. And I can certainly understand that viewpoint. It does get a little tiresome, some of the endless back and forth of some of these macro things. We're in a trade war. We're not in a trade war. We're in a trade war. We're not in a trade war. It does get a little tiresome. I'm with you. So, and that's the case. So people certainly seem to be flocking to the Russell this week, and Mr. Nick, which is kind of an interesting thing. And again, we said it for a while. Just that insulated nature, on top of which the notion that it's more volatile. You're seeing Russell vol is usually at least a point or so. Right now, it's about a point higher than it is out there in the S&P. S&P is right about a 13 and change, when we're seeing 14 and change out there in Russell land. So even when vol is coming off and it's anemic, there's still a little bit more of it to be found out there in Russell land, listeners, Mr. Nick. And yeah, it's kind of an interesting week out here from Russell from an options perspective. Maybe I think more informative even, Nick, than kind of just diving into perhaps individual individual what's lighting it up out here from a Russell perspective. But looking at as a broad and amongst the broad indices, that's kind of where. And traditionally, whenever we look at Russell, when we see the large spikes in volume, when we see the large spikes of interest, it's when things tend to disassociate, quite frankly, kind of like we're seeing this week. When Russell's moving kind of in the opposite direction to the other indices, at least from the avoiding the downside perspective, that tends to drive interest. When the vol becomes a little bit disassociated, which it certainly is now, that certainly drives some interest. So are you seeing that maybe anecdotally over there in some of the other products as well, Mr. Nick? Like, I know you like looking at S&P E-mini skew, for example. Have you noticed anything aberrant or weird between the skews there of those two products, or is it still pretty much like it was last week, still pretty much similar?
Yeah, I think, again, and I'm trying to, we're having a little bit of a problem with our Russell settlements. We're getting bad file data the last couple of days, but from a skew standpoint, I think the puts are still more bid in the S&P than they are in the Russell. The calls are still offered, but the puts, I think I have a little bit more of juice to them than they do in the other one. And I guess that would sort of make sense because of for what you said in terms there's more dispersion on those. There's 2,000 of them that we're watching in the S&P 500. Obviously there's only 500. Then you get single stocks that make the fluctuations in that. You can get some good handled movements just based on some of those bigger stocks. So you don't see quite the downside need for the Russell according to the skew. You still see the same sort of call offering, so that could be some of the writing that's going on as well. So maybe there's some similar there. You just don't see the big tilt that you see in the S&P in the Russell as well. And then hopefully by the end of the weekend, some of those numbers should be fixed and taken care of, so you could take a closer look via the report, which is now live and open on the CME website. But that's really what it is. I don't think it's changed too much. I think for a little bit when the Russell started trading the options, when we paid attention to it a little bit early, right when they came on, when Sean first came on, we saw the skew was, kind of similar on the call side, but a little less rich on the put side. And it kind of came in line for a little bit, not quite. It was still always cheaper for the Russell. And now I just think it looks cheaper than the puts look cheaper in the Russell than they do in the S&P. So, well, I guess that I would imagine that just has a lot to do with the fact that, it takes a lot more to make that downside in the Russell move than maybe in the S&P 500.
Yeah, exactly. I mean, we saw it this week, right? And a strong case for downside in the broad markets, and yet Russell didn't really have that. So if you were worried about it or looking for the need to hedge, less terror, less need to hedge on the downside there. So on the flip side, if you are looking to pick up some puts out there, then I guess that's a deal for you out there. So talking equities, we'll hit really quick on the big whale out there as well, the E-mini S&P, where a lot of you guys like to play. Active week again. Net, after all this back and forth, we're net kind of about 10 handles away from where we were at the start of the week here. So a lot of back and forth for not a whole ton of movement at the end of the day. Net, I mean, back and forth. Intra-week, there was a ton, of course, but net, if you just looked at last week's show and this week's show, you say not a ton has changed. Vol was up a little bit net. Again, we're seeing it coming in today, so a lot of that pop is kind of being erased as we speak. In terms of action, open interest up 14% in the E-mini options, so that's a pretty strong week. Even the fact that we had a shortened trading week, it didn't really seem to dissuade people out here. The number one with the bullet, but with about 25% of the volume coming this week out here in June. And then, not surprisingly here, given the fact that people like their even strikes, people like their puts. You kind of just alluded to it, Nick. The put premium is still there in the S&P. 2,600 puts lighting up the tape this week. Number one with the bullet. In fact, 2,600 puts were kind of the option du jour in the weeklies in this week. What is this, week one, week two? But where we're looking here, the big trade is actually in the monthlies out here in June. The June 2,600s doing about 26,000 contracts this week. The lion's share, almost 10,000 coming on Thursday, 7,500 on Wednesday, 6,000 on Tuesday. Only about 3,500 today. Again, a bit of an upside day, so not exactly surprising. Net only about 1,200 opening. So there's been a lot of back and forth on this strike as we're threatening it, moving it away from it, threatening it again. It's been one of those topsy-turvy weeks, listeners. And so that's kind of where the crazy action has been. I'm just scanning really quickly. Actually, you know what? Hot on its heels, too. If you're looking at some interesting paper out here, the longest term we got going out here right now on in terms of the Globex E-mini, we got March 2019, and that was almost the number one. It's quite close. It's number two, but only ever so slightly, Mr. Nick, was the 2530 puts in March 2019. So a 200 handle sell-off is what they would need for those bad boys to come into play. Doing a ton, not so much today or Wednesday, but nearly 18,000 going up on Tuesday and about 6,500 going up on Thursday. So very active contract, and about a little less than half of that is opening, about 12,000 contracts or so out there. So interesting stuff, fascinating. I would not have picked that, Mr. Nick. Kind of surprising. Did that one catch your eye? Anything else catching your eye out here in index land this week?
No, I don't think anything. I like you mentioned, open interest is almost 4 million now. So that's really just tremendous, up 14% this week, like as you said. And again, we mention every week, we should mention it this week, just a perfect example of how weekly should work, right? Lots of volume, almost 365 plus thousand volume this week in the contract expiring this afternoon. I mean, that's just a lot of stuff. So just short-term trade opportunities in these weeklies in particular. Those people are trading those like futures probably, right? Just scalping those like they get enough of a delta as you get inside of this 2-3 days that you're basically you're probably at like some cheap premium, and you're getting something going from a 20 delta to an 80 delta fairly easily. So you got to keep your eye on that. That's really always what I'm watching, is paying attention to see which of those weekly contracts is really kicking it. And that was outside of the standard quarterly with 518,000 so far. You have and there's still an hour left in the week one contract. So I'd be curious to see how much more trades today as we have another 50 something minutes before the market closes. So that's always the best argument for weeklies is, you get a market moving, then the weeklies are where you want to be.
There you go. Gotta love the weeklies, and the weeklies have been so much of the story in everything, in futures, options in particular. So many products are just embracing short duration. Ever since we started that LSFO show years ago with CME, that's been kind of the trend, and it's kind of just picked up pace, if anything, over the years here. Let's move on really quickly, Mr. Nick. I know we did a deep dive into ags a couple of weeks back with the guys from Acuna. People really liked that. People like some ag talk. And ags are also moving again this week, given all this back and forth with the trade wars and tariffs and protectionist stuff on this and on that. And on, so all the ags are wrapped up in that as well. Of course, we see China a big consumer of things like soybeans, and we saw soybeans moving overnight, at least, on talks of all these trade wars. Net on the week, though, the beans actually down about 20 handles, which is kind of interesting. So about 1.5% or so out there. Vol also coming in a little bit, which is kind of interesting given the fact that kind of the narrative for a while out there has been that vol is already in the toilet kind of across the ags. I'm looking at some interesting charts they sent in here of June vol and July vol in soybeans versus 7-year averages. And, at the time this chart was made, it was about 16% in the vol, which is kind of still where it is right now, right around 16% in the at-the-money implied vol. And the 7-year average looks like it's closer to 19, and the July contract is a little bit shy of 16 right now. And it was about 19 as well for an average. So, yeah, it's interesting. We're seeing similar story, even more dramatic story out there in corn. So kind of fascinating to see that is, even though the vol is cheap, it could still, as we said it before, it could still come off. In terms of what was lighting it up out here really quickly here, Mr. Nick, looks like it was a bit of a battle between these, what are these? These are the Nove Nova 2018, 1,100 calls. And again, the futures went out about 1020 right now. So there would be a substantial bit of upside there, doing about 24,000 of these contracts here. The lion's share actually coming today, 16,500 hitting the tape again. A lot of that tariff related. So people obviously perhaps a little bit concerned. Tariff's going to drive up some bean prices. Not surprisingly, stocking up on some upside here to do it and getting themselves some time going all the way out to November on these. So not exactly just scarfing up the near-term contracts. In fact, in the near term, it was kind of a bit of the opposite. If you're looking at the July contract, number one with a bullet were the 1020 puts. And those traded, not surprisingly, earlier in the week on Tuesday with about 21,500 total going up this week, and about half of that, about almost 11,000 going up on Tuesday, Wednesday, 7,000. So kind of a tale of two stories. You know, people may be fading beans a little bit to start the week, and then, oh no, here we go again with the trade wars. Oh, bam, up to the upside again. Let's pick up some calls on the upside instead. So kind of depending on where you were looking this week, Mr. Nick, the beans maybe a little bit of a different place. When you talk about people getting whipsawed in the WTI Brent spread, and the move wasn't as dramatic, but maybe the change in sentiment was out here in beans, maybe catches some people flat-footed out here as well. Is that was catching your eye out here in the ag, sir?
I think, I wanted to look when you mentioned the volatility. I went and looked at the curve, and, we come off of, what do we come? We come off of like around 1040, 1050 at the beginning of the week, and down around 1030 now. And the vol, like you said, the vol's in, but I think a lot of that shift is attributed to just kind of moving around the local volatility of the vol curve. And I just writing some notes as you were talking. I think that would be an interesting thing for us to be able to look week over week to see how, the at the money is going to change based on what strike it is, right? So it's important to know sort of the general magnitude of the volatility as it moves. But I think what we fail to have very clear in some of the reports here is, okay, you change strikes. So what's the change from one strike to the other in terms of the volatility? Is it an increase? Is it a decrease? Okay, now what's the how did that strike change from itself the prior week, right? So you're going to have, we really got to get a better handle on how much that it says the volatility is down. I think the volatility is down. It could be flat because a lot of it is just the curve did not change. The curve did not shift. Just the future moved along that vol curve, and that local volatility is what I think we need to report on a little bit better. So I'd say, yeah, market's off a little bit, probably rangy traded, didn't follow through. So we just the future's kind of moving, and there's really no change in sentiment of the skew. The skew is going to change just from a natural way it's calculated based on the 25 deltas are going to be, richer or cheaper depending on where you are on the curve as the future moves. But all in all, I'd say that curve didn't do too much shifting around this week, other than just having the future move along the vol curve.
Really, really quickly here on corn as well, because it's kind of hard to talk one without the other. I mentioned the vol has kind of been anemic. Corn vol June average right now about a little bit less than 16. The average is about 26 for June, and for July is about 19 right now, and the average is again about 26. So anemic levels, and yet we saw vol kind of coming off again this week. A little bit of a mixed bag in corn vol. Net the corn futures off about 15 handles on the week. So again, for all this talk of concerns about trade wars, we're net down on the week. So kind of interesting in terms of what was lighting it up out here. Again, it was the July front month and upside calls. That was kind of the dance out here in corn with the 400 calls. We settled out right around 390 listeners, and the 400 calls in July. Doing the lion's share of the business, 34,000 of these going up this week. Kind of 13,000 on Tuesday, 10,000 on 13,000 on Wednesday, 10,000 on Tuesday, and about 9,000 on Thursday. So a pretty active contract. About almost 40% of the paper going up in that July expiration month out there. 450 is also getting active out there as well in September, doing about 24,000 contracts out there, and that's not far enough for your blood there. The Dees 420s, doing about 14, almost 15,000 this week. So kind of a bit of a call palooza out here. Not quite as bifurcated as we saw in the beans, where, it was kind of puts earlier in the week and then calls later in the week. This seemed like it was kind of all calls all the time out here in corn land. A little bit of a different beast out here than soybeans, but still interesting to see how the ags are reacting to all things tariff. Let's do a really quick check-in here as well, Mr. Nick, on all things crypto in particular, before we get some questions. In particular, we got the futures over there on CME for Bitcoin hovering right around 74.10 right now. So off about 135 handles. So pretty much an average day for 4-year-old Bitcoin. Looks like doing about 2,000 contracts, which again, that's a 5X. That's about 10,000 coins out there as well out there. So interesting stuff. Mr. Nick, anything else catching your eye either in the crypto here? We got some questions about crypto, so we'll talk vol about that in a minute and things too. I want to save it for that. But anything else generally catching your eye out there in crypto, or perhaps in the corn, or maybe another product like maybe the rates we didn't have a chance to squeeze in here today?
Yeah, well, I'll do the rates there. I'll do the rates first, I think, and then we'll come back to the crypto because I got some stuff to talk about there. Yeah, I think one thing we didn't mention is like the volume earlier in the week when Italy had the problem and their rate went from negative to positive, almost like a 2.5% change. The CME had just like tremendous 50+ million trade earlier in the week in the rate. So just a huge volume on the exchange this week, and and just a testament to what it can handle given what's going on in the world. So I just wanted to make sure that we talked about, and that was that was Tuesday when all that news came out, and a little bit of trade from the Monday evening session, but which was the Tuesday, but just big numbers out in the treasuries and the rates complex. As far as the crypto catching my eye, I mean, other than I think the good thing that will be happening is that starting Monday at 7:30 in all of the feeds that the CME has, they had it in the streaming data mine, but now it's going to go to the MDP feed. You'll be able to get Ethereum pricing as well. So there's going to be a real-time index for Ethereum, ERTI, and then a Ethereum reference rate as well. So you should take a look at that starting on the 7:30 on Monday, and all our crypto charts will now be not called, or our crypto areas won't be called Bitcoin areas anymore, that in the stuff that we're covering for CME, but it'll be called the crypto or cryptocurrency section. And we'll have about a couple weeks of history of that crypto facilities index, as well as whatever's trading throughout the day. So that's kind of so Mark, we're starting to see that a little bit of the creeping of the crypto infiltration in right now it's in their equity index section. Pretty soon they're going to have to change that to its own index section, I think. But I think that's the news from the crypto standpoint on my side and the CME side.
Yeah, it's coming. When we get in the Ripple, sir, that's next, right?
Oh God, I would love it. Love it.
I know you're a Ripple man out there. Everyone, to each their own. To every coin, everyone's got a coin that they're picking. Someone was just talking on our last show about Ethereum, man. Maybe that'll be the winner. Whatever. If there is even one winner, there's 1,500 some amount of these things now. So chances are there'll be multiple winners or indeed losers out there. But since we're talking crypto, you guys got it on the brain. We're going to talk some volatility of crypto and a bunch of other cool stuff. So let's get to it with your questions. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's do it. Let's get to your questions. All right, Mr. Nick, I know you got more burning a hole in your brain there, so really quickly, let's get to it before we get some listener questions.
Yeah, no, one more thing. Just I encourage everybody to take a look, to go out there. If you haven't been paying attention to the Fed Watch tool out on the CME, you should go out there and look at it. The last week or so was particularly interesting because it went from, over the course of the news and the action in the market and all that kind of stuff, it went from basically 100% probability, the tool, based on the Fed funds futures and the calculations that are available on the paper as part of the tool, 100% certainty that it looked like there was going to be another tightening because you couldn't even see the current rate on the chart, and it flipped all the way to 25% that it would stay the same. So the sentiment really was changing in the futures for what the Fed was going to do. Now it's back under 10% again, but just to see the whipsawing of that is really worth paying attention to, especially if the short end of the rate curve moves. So I just want to throw it out there and make sure that people
especially
know
with
that tool's out there.
With today's number, right? They had to have a big effect. This is what the best unemployment we're seeing since 1969, with a brief blip there in 2000, I believe. So yeah, some historic numbers we're seeing over there. Certainly going to be factored into the Fed's calculation, I would think, going forward. Speaking of factoring into calculations, we asked you guys to do a little bit of the old calculating yourselves this week. We said we're going to keep it with our vol theme. You guys like it when we ask you vol questions, so we oblige you. And we asked you it's a little flash poll towards the end of the week here. We thought we'd ask you, quick one, simple one. Which product do you think has the highest 30-day implied volatility? I know implied is a bit of a dubious term when it gets to Bitcoin, so we can maybe say realized for that if you want. We say no cheating or checking with your brokerage. Try to go with your gut feel on this one. We gave you 4 choices. We gave you the old Tesla because everybody loves Tesla and it's always delivering on the vol side, right? We gave you VIX, not S&P 500 vol, but VIX itself. Again, a little bit of a different story. How volatile is VIX? The volatility of VIX. Bitcoin itself, kind of the conversation is always around the volatility. Or Mr. Nick, our old friend, the Russell 2000. I feel like I'm cheating asking you because you have the data, so you know the answer. But it does come down to pretty much 2 of them. Mr. Nick, do you have a vote here? And then B, more importantly, what do you think our audience is voting for?
Well, I would probably think it's Tesla or Bitcoin, but I'm looking at the Bitcoin vol, and it's the realized is pretty high, but I don't know if it beats. I don't watch Tesla, so I'm going to just guess Tesla just to go against what everybody else says.
Look at you picking Tesla. I figured for sure you'd go the coin or one others. Yeah, our audience right now it's flopped, Nick. It's kind of been back and forth, hot and heavy. For a while there, Tesla was winning. Some votes have come in now for Bitcoin, maybe since we started doing the show here, because it's at 37%. It's a slight lead for Bitcoin. 37% for Bitcoin, 35% for Tesla, Mr. Nick. 17% for VIX, and only 11% for Russell 2000. It was leading for a while there. Shows how much things have vacillated out there. But yeah, I could weigh in, I guess, give the answer, but it's got a few hours left in the poll. I want people to be able to play. So maybe we'll discuss the answer on next week's show. Nick, what do you think?
Yeah, well, yes, chat it to me so I can react, and then we'll discuss it next week. Tell me what it is.
Yeah, it's kind of class back because we've talked. Let's just put a number out there right now for our listeners. We've talked before on like the 30-day vol for Bitcoin, right? And people think it's 7,000, 7 million, but it's around like 90 to 100 most of the time, right?
Well, again,
it has gotten down like in a 60, I think, too.
Well, I'm looking at the realized. So if you look at like the daily change over the daily change of it, right? So right now everything is, it's in the 50s, right? Even the short term 15 minute and 60 minute bars, those are in the 50s around, some maybe even a little mid 50s, low 50s, stuff like that. In fact, the 15-minute bars, I think, or the 60-minute bars dipped down to below 40. So I'd say 50. That's why I would guess Tesla. Just looking at my Bitcoin numbers, I just feel like Tesla is probably going to have a little bit more realized vol than that, because the Bitcoin is, as much as it's been moving, it's really sort of, its movements have really sort of been rangy.
Yeah, I was leaning. I was pretty sure the winner. It was down for me to 2 because I knew they were kind of close. And I kind of thought chatting with you would cement it for me this week. So I was kind of leaning the right way. I won't say what it is. I want you guys to play along. Nick steered you in an interesting direction. That's all I'm going to say here on the show. Giving some love here for Tesla. You guys can do the homework. But what fun is that? Use the old, I guess if you're really so inclined, if you want to go dig it up, you can. But use the old gut out there. Things are volatile out there, shall we say. Speaking of coins and volatility, Mr. Nick, we have Ned Brown here saying, you guys had a guest on a few weeks back, and he mentioned what he thought Bitcoin volatility would be on the options. You would think it would be an instant winning product. I've always thought the tricky part is finding the market makers to provide the liquidity. He goes on to say, I assumed the big volatility was the reason crypto options weren't being pushed. Has anyone asked the SEC about the, I'm pretty sure he's referring to a couple of weeks back, Nick, when you weren't on, it was just me and Tim McCourt. Holding court with Tim McCourt. That's what we should have called that episode. We talked a lot of crypto, as you might imagine. And I did put the question to him. I was like, when are we going to see the options on the Bitcoin? And he kind of did the same conversation we've had with, other exchanges who have these products out there. Everyone was in a rush to get the futures out. Then all of a sudden, they're kind of putting the brakes on for the options, which is, I think, surprising. We were all voting at the beginning of the year when we thought it was going to happen. I was voting personally around the end of Q2. And we're in June now, just June 1st today. So I'd be surprised if we see him by the end of the month. That's all I'm going to say there. Not a lot of love, it seems like, for the crypto out. I don't think it's not the vol. We're just talking about the vol here a little bit here. It's not quite the vol. We've seen vol listed on, or options listed on volatile products before. I think the SEC, it does have something to do with it, talking with some other exchanges out there that have the crypto, futures. To them, the SEC has been a bit of a stumbling block. So that, I think, certainly have something to do with it. But I think the notion of, I think you're right too on finding market makers. That's a challenge for any new options product you're going to launch these days. There just are not many of them anymore. So launching a new product, getting firms up to speed. I think Tim actually alluded to that when he was on the show, saying getting firms up to speed, what the specs are going to be, what we're looking at, all this kind of stuff. They seem to be very, very, very slow going on that front. After, again, got the futures out, everyone was excited for the futures. The next step was the options, and everyone seems to be kind of taking a second look. Instead, they're putting out things like Ethereum, which is also cool. Everyone likes that, but people want tradable products. Mr. Nick, what do you think here for Mr. Ned Brown, thinking that market makers will be a problem for crypto options, and also the big volatility is the reason people aren't launching them?
I don't know if it's the big volatility so much. The market makers, they tend to, I think there's a lot more of them out there that are just kind of laying in the weeds, ready for this thing to go, and have been doing the same sort of pricing. And plus, people are already trading on Deribit. I'm looking at it right now, trying to compare their at the money on the 30-day versus ours, and they have about a 70 vol, and we're calculating about on the daily change. Yeah, the 15-minute change. So like depending on which one, if we're looking on our daily changes, our vol's around the 85% for that, the money. If you're looking on our 60-minute bars, it's around 46. And if you're looking at our 15-minute ranges, which is our short-term stuff, you're looking at about a 65. So let's see what that, so, again, and that's kind of why, well, let's answer the question. I don't think market makers are going to be hard to find. I think people have been waiting. I think that you're going to see more, especially when they eased some of the Volcker stuff now, you're going to see banks get back into it because this is going to be their entree into it, I believe. There's already a bunch of groups out there doing stuff. They're kind of probably waiting for a more listed version of that. Because, again, you're just making it on futures prices again. It's not like you're going to have to do coins, right? It's not like the Deribit where it's on the cash coin that you're going to be making on a future. So it's going to be like anything else. And the ranges have, as much as they've been significant, they haven't been, if you look at it from an index standpoint, it hasn't, it's a bigger move, but it's not that much that they can't handle it. And it's been tamped down quite a bit since the early days, when it was early days. Look at me like an old person, since it had the big move up to 20,000. So I don't think it's market makers. I think it's just people wanting to be exactly sure that they're getting in it for the right reasons and there's the right amount there. And like you said, from a regulation standpoint. So And I'll really be curious to see once it happens. Right now, the vol curves it'll be interesting to see what the vol curves look like, because it's trading. It hasn't been biased one way or another here at all. I don't think it's going to be some big jacked up skew one way or another. So that's really what I'm most curious about.
Yeah, that's kind of the question for a long time, right? What was the skew going to be? Everyone asks every week. We got asked that question. What's the skew going to be like in Bitcoin options? And we heard a lot of different arguments for a lot of different, and I could see arguments for a lot of different ways. But given what we're seeing now, perhaps not as crazy as people thought. From back in the old days, right, Nick? The old days back in December, the bygone era, the days of yesteryear, known as December, 20
like dog years,
2017. Right? All right, we got one more. We got a bunch here. We only got time, I think, for about one more. Let's do a quick one. This is a good one for you, Nick. Comes from I guess we got a Star Wars celebrity. He's BB8. This is BB88. So someone globbing on here. BB88 saying, "How do I do?" That's a good sentence. How do I do what Nick said last week to see the options activity on that day's expiring future? Oh, I think I know what he's talking about, Nick. I think he's talking about, remember we said last week, I think we were talking crude options, and we had talked about the ones that had expired, so you couldn't see them. And I think that's what he's referring to. Is that what you think?
I believe that's the case. Well, there's nothing to do yet. We have to give you the ability to do it. So you are free to tweet at me or email me, and as something's expiring, I'm glad to take a snapshot for you and shoot it over to you. And we're working on getting the expired contracts available within the TWIFO report. So the long-term answer is eventually it should be in the TWIFO report. The short-term answer is just let me know what you need and I'll get you that data.
How do I do what you do, Nick? How do I do it?
How do you do the voodoo that you do?
How do I do that voodoo that you do? Yeah, good questions. We got a bunch. We'll get to maybe more on next week. We got so many products lighting it up this week. That's the downside of having a show full of hot products. We got to get to them all. We could probably do the whole show just on crypto. Could do a whole show on just crude this week. Maybe some ags and gold. I mean, all of them lighting it up this week. The weird stuff with Russell, what's going on there versus the S&P. All kinds of interesting things to break down. Unfortunately, that music means we've come to the end. Nick and I probably go another couple hours here. Maybe you guys are probably like that, but we got to shut it down here. Before we go, though, let's go back around the horn. Like I mentioned, our buddy over there, Mr. Sean, should be back with us next week, so that should be good. We can get a check-in. I know they have their reallocations coming up out there in FTSE Russell. Usually drives a lot of interest, a lot of action, so he can break that down for us more. In the meantime, head on over FTSE Russell, FTSERussell.com to learn more about all the stuff we're talking about, how the small cap stuff's fair versus the large caps in different market environments, all that other good data. I want to give them a follow while you're at it as well over there on the old Twitters. They are at FTSE Russell, FTSE Russell, 2 S's, 2 L's on Twitter, or if you see any of the tweets we put out there or see me or Nick about the show, you should see them in there as well, so you could grab them off there as well. And, of course, while you're at it, head on over to cmegroup.com/TWIFO. See all the cool reports they have cooking on over there. While you're over there, too, I was talking to some of the educators at the CME Institute. They want to get on the show, by the way, so we'll see if we can get them rotated. But they're doing some cool stuff over there. So if you have all these questions you guys have for us in the interim when we're not doing shows, CME Institute. I used to call it Futures Institute. It's been rebranded. CME Institute is the place to go. Ask those guys. They'll be happy to answer your questions about a lot of this cool stuff, about the spreads you're asking about and all these other things. It's unique to the futures options world. They got you covered over there. And last but not least, Mr. Nick, you're talking about all the cool stuff you guys are working on. Our friends like BB88 and others, they got projects for you to do here on the show. But in addition to all of that, what are you guys cooking up over there at Quick Strike these days?
What do we got? Well, like I said, be a good announcement of a cool tool coming out pretty soon. Can't talk about it too much, so that's a dumb thing for me to even say, but that's just something that's coming down the pike. I mentioned earlier about the Ethereum being available. So that's out there. If you haven't looked at the cmegroup.com/quick strike page, we released a new options calculator for both CME products as well as an agnostic calculator, so you can just use and choose models and stuff like that. No equity stuff, just future, no straight equities, just futures options calculator. And then, coming soon within the next 4 or 5 weeks, we're going to have a new version of QuickVol, which is going to be a really nice place for you to get your historical vol curves, volatility data, skew data, and stuff like that. It'll be viewable as well as purchasable download, so you can do your own analysis, that type of stuff. And then what else is good and new? And then just a few other tools that we have in our hip pocket that we're just waiting to get approved. And once those get out there, it'll be a lot of good ways to get information about the market. And we're also working on trying to get some other exchanges into sort of a free format for people to use. And then if we got any dairy people out there, we're looking at doing a very dairy-specific version of QuickStrike as well. So a lot of fun stuff, as well as our crypto that we're working on. And then hopefully in the next quarter, we'll have the ability to make micropayments on QuickStrike using Ripple. That's kind of the big one, the fun one that we're working on. So there you go.
You guys got a lot of stuff cooking. You got a dairy version? I want to check that out. I know there's a small but hardcore component of our audience that will really be interested in that. So we get hit up all the time. What about dairy? So some of them are joking, but some of them are very serious. So maybe I think there's definitely an audience for that, Mr. Nick. And Ripple. I can buy my Ripple and my Kraken, then I could use it for my QuickStrike. How about that?
That's exactly what we're hoping. And the whole point of that is going to be so if somebody doesn't want to spend the whole monthly, they can come on there for a day and micropay. That's sort of the idea. So it should be pretty fun.
It's all the crypto world's all about it these days, right? Small fractional micro payments. So where we're all headed, Mr. Nick. You guys, look at you guys on the bleeding edge. Check them out. Bantix.com, BANTIX.com to sign up for QuickStrike. Get the whole thing. Don't just go for the fractional. But if you want to go fractional, they're setting that up for you too. And while you're at it, give them a follow over there on Twitter, QUIKSTRIKE1, QuickStrike1. And on behalf of Mr. Nick and our friends over there at CME and Russell, hopefully Sean will be back with us next week in studio. Maybe bring in delicious burgers. That'd be nice. And indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, asking questions, all the fun stuff that you guys do. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered. With market data reports ranging from open interest to the term structure of volatility, QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at Bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, The Options Insider or via questions@theoptionsinsider.com.